Good morning, everyone. Well, you can't hold this market back. It's amazing. It has mini crashes during the day. I'm saying mini crash because when you look at an intraday chart, like what was happening yesterday, you can't see it on the daily chart. I guess you can see the little bottoming tail bar, but it goes down like someone just threw, a bag of rocks off a roof, and it bounces right back up like if you're an old timer that used to play stickball, a Spalding, one of those pink Spalding balls I used to play with. Anyway, the buyers continue to show up on the dip, and you can see on the futures here, higher high, higher low bars. And coming into the gap fill over here and the all-time high. And that, of course, is going to be a significant reference point of price resistance that everyone is aware of. And it's not uncommon for prices to overcome that before beginning to pull in a little bit. So just to recap what's going on here, it's amazing collapse. And, everyone has said this has never happened before, to have such a drop and then an immediate turnaround, and it's been a grind up. So you can always think about why. And of course, we learn from the past. And I suppose everybody thought, well, it had really nothing to do with the economy, why it fell at the time. It was the fear of everyone getting sick and businesses shutting down, what we all know happened. And I guess it was anticipated that it would be much worse than it was. And you could say, well, GDP is at an incredible all-time low, so on and so forth. But all of that is, I guess, going to unwind itself. And maybe that's what the markets are saying here, that enough of this corona scare tactic and the mass and so on. Of course, we know where people have gotten sick, but there's other parts of the world that are just fine and haven't been through what we have. But in any event, as participants in the market, we look at price action and we see on the way up, every bearish bar was negated. If a correction ensued, which it did, it was sideways, choppy price action, which we could see here, and red bars ignored and topping tails being ignored. And the one thing we all have to be careful of is complacency. And I've been doing this a long time, and it is easy to get lured into it'll never end, because it always feels like it'll never end before it ends. I'm telling you, I've been through it numerous times. And so we don't know when it's going to end. Prices could just continue to march up through that high. But as long as you have a money management part of your trading plan, it'll be okay. Right? So S&Ps are coming up to that high. There's that unfilled gap, which we talked about, the all-time high. And so there's going to be some hesitancy and probably some backing off, especially since prices are gapping up here a little bit. And I see the NASDAQ futures have come back. They were actually negative a little while ago. So unusual, but they've been leading the way. And you can see the stall there in today's bar, incomplete, of course. But you can see how it backed off right away as it pushed up to that all-time high. And so we'll see how it handles this, how it handles the day. And as we look at intraday timeframes, our main intraday time frame, long-term intraday, is the hourly. And you can see it's still in an uptrend. This was the mini crash yesterday as prices churned sideways and then fell. Look at the giant one bar down and then up it came. Well, that's the day before yesterday. It doesn't look as bad on the hourly chart as it did. I guess it was around here. Yeah, around 3 o'clock that had this big drop right into this support, and then it just stabilized and went right back up again. Anyway, that's kind of been the way things have been here lately, where we get these big drops and things just recover and come right back up again from that. So we mark off our major support areas, and over here on the hourly, there's this one at the pivot low, PL, pivot low prior to a higher high. And then there's this larger one down here with 3 pivots, obviously, which will be much more significant as a reference point for prices to hold that area. Now, when you have them like this so close together, the expectation is that, well, it'll stop at this one. We'll see if it bounces from there, and maybe this one, which is stronger. So it'll be rather choppy again, I think. You can see the 5-minute is already trending down, and it's cut through these pivot lows here on the 15, which will be the same on the hourly. You can see a little head and shoulders top there, and it's kind of stalled. And I guess the next reference point, we'll see if it gets down here. So what we do here every day pre-market is mark off our reference points of short-term and long-term. You can set alerts there to be aware you may not be watching that point of reference when and if prices get there, so let the computer watch it. And so now, because of the backing off, we have at least an initial reference point of overhead resistance that's been created. We got support here. We got resistance there. Leads back to a thought of chop. So, and market's getting close to resistance. Could be a little tricky here. Well, it's been kind of tricky for a while. Anyway, just a quick look at our internal sentiment is still up, reaching for the moon, bearish, and breadth just dead neutral, flip-flopping back and forth across that 0 line. So I can't remember a time that sentiment has stayed so bearish so long and breadth has done nothing, but it's different this time. We say, it's never different. Well, yeah, it is different. So, I've been talking about the possibility that the markets take off and there'll be some participation of bringing up the rear, or the junk stocks participating, what has been under participating, the laggards, and then breadth coming up into this area. So still waiting to see if that's going to happen. Maybe today's the day. New stimulus coming, if it's coming, all this jawboning, and I'm kind of sick of it, tell you the truth, myself, politicians and so on. And finally, the Russell, finally taking off and coming up to this reference point. Couldn't take off during the day. It was just jiggling around. And notice the wide range bar here on the 15-minute. You get a wide range bar breakout and it comes right back in like that. It's another signal of an expectation of some chop to start the day, because you got traders buying the breakout, took a nice pop, and everybody sold into it. Well, not everybody. Some people got stopped out. In any way, it creates a lot of uncertainty when things pop like that and then immediately fail. That's why you have to always be looking to the left and say, well, where's the next stopping point? Because as prices reach whatever, it's the Russell or any other stock, when they get close to the stopping point, and everybody's looking at charts these days, and they're learning to look to the left versus drawing trend lines and Gann lines and channels and so on and so forth, and learning to keep it simple and knowing how effective just turning your head a little bit or your eyes over there and say, hey, there's a swing high up there. Somebody's going to be selling there. Yeah, Tara, the Ichikumi cloud with the various lines swirling around the cloud, and these mysterious indicators of the holy grail out there. And then there's us that are just turning our heads and saying, hey, there was a lot of selling there before. I bet you there might be some selling there again. I better take some money off the table, right? And it works. It's worked for a lot of years. SPX, let's take a look at that. Let me take a look at the futures again. SPY. So 332, gapping up a little bit. Strong close yesterday. That pop right into the close, I guess, was, it makes me think that, okay, threatening to go down, and it couldn't. And shorts just hanging on to like I know it's going to go down at the end of the day, right? And then it doesn't, and they all hit the offer and just blast off. And now it gaps up a bit up here. So, we may see some selling right off the open here. We don't know. We take the 5-minute bar and see what it looks like, whether it continues higher. You can see the same unfilled gap over here, which is, I guess, right around 333-ish, 334. So keep an eye on that. So let's go to SPX. And unfilled gap, 33. Just go 3350 area, and then 3400, the big number. Trader's telling me it's 3370. Okay. 3370. No, that says 3337 is the close of that bar. The high is 3393. So as I usually think, all right, this is gapping up. That's where resistance is. Let's wait for maybe a 5-minute bearish reversal or topping tail. And then, if it, opens up, the premiums will, increase on the call side. And then we can see what's got the juice and then look for at least a 5-minute reversal bar, and we can sell above that. And on the put side, well, I would say at a minimum below yesterday's low. You're saying 3270. This is the gap fill area. Yeah, so while we don't have a significant support point, we know that if it fell from here down to there, buyers are going to come in. So with credit spreads, we always consider where support and resistance should come in. And then, let's give it a little extra room for breathing room, because as it comes down to your strike, those of you that have never trade SPX credit spreads, they're a wonderful instrument, just like credit spreads are. But this is credit spreads on steroids. And what I mean by that is leverage. And it'll make you sweat. So we want that little extra room. So on the put side, obviously, from my point of view, I want to see it come down first to increase the premiums. And so just something to think about, those of you that may be new to credit spread, there's a balancing act there, meaning you could say, well, let it come down and the premiums increase. The balancing act part is, how long does it take to come down? Because if it's 2:00 in the afternoon, by the time it comes down there, what you thought would be great premium at, say, 10:00 is not going to exist, because the melting ice cube, as Dan calls it. So there's this balancing act of saying, well, it's come down enough. There's the premiums. I've got to kind of balance it out to say time is going to erode that thing. And so experience kind of helps you along with that. Anyway. All right. So there you have it. YM led the way yesterday, right? The junk kind of lifting up there, getting closer to that resistance area. But there was one point during the day where everything was kind of flat, doing nothing, and the Dow was moving up. Anyway, so we had the same breakout failure there, creating some uncertainty. So there's going to be nervousness as you get closer. Excuse me, my voice today. To resistance areas. It's just normal. Doesn't mean it's going to fail, but it came from this area where it spiked down and buyers stepped up, and now it's grinding up to resistance. In other words, you've got a trading range here. So bottom of the range, top of the range, there's going to be sellers. Simple. Bonds backing off a little bit as markets go up. Normal. It's been this churning at this resistance area for a while. You can see it there on the weekly time frame. So that's come off quite a bit. Oil, just whoa. So you can say I didn't look at this earlier. It had broken down, and this has been the MO of this market. Nasty breaks that suggest lower, and buyers step up again. And what I typed is that the theme or title in YouTube is the market signaling that coronavirus is over? Well, that could be the case. And I'm not taking it to be, the coffin nail as it's been put out there to be anyway. Mask, wash your hands, so on and so forth, and we're all going to live. So breaking out here, bullish price action, and that's great. That's going up there. It's got a void. What's going to stop it? Absolutely nothing. But that doesn't mean it's going to, it can just rally up into this area up here. I'm not saying it can't, but one of the things you have to be aware of is that if this breakout fails, and it would look much more ominous than what we saw here on the ES, on the 5-minute chart, right? It's a small time frame, but it creates uncertainty, and then messy trading begins. And so now we've got a breakout, and the correct price action is, right, our factory work is that prices stay in the upper half of the wide range bar. The bar is not done yet, choppy, or it just keeps going up. So on the daily chart, you've got that red line, the 200 MA is up there. There's a pivot high up there above 47.5, 48.5-ish, but very little resistance. So the same, it doesn't matter what you trade. The technical concepts we speak about are universal. They have to be, otherwise they wouldn't be true. And so this long consolidation, remember over the last 2 weeks, I've been saying, what is with this market? It goes sideways. You have red bars ignored, buyers on the dip, yet it doesn't take off to the upside. And so now we're getting some movement to the upside, but with this sideways consolidation, this breakdown, this recovery, this move up, this should move up with relative ease. So take a look at oil-related ETFs, which haven't followed the price of oil lockstep at all, and oil stocks. It should help. All right. Gold. Bull market just, is it extended? A little, but don't short a bull trend. And here it goes, it continuing to push higher. And so now, remember, we started talking about this way back here in 2019, right, with this multi-year consolidation. And so now it's cleared that high, and there's nothing there. There's nothing there. So it's gotten more extended. And so we'll see at some point, of course, it'll pull back. And silver continuing to move as well. Nice bullish consolidation and pushing higher. And I think this is something that'll begin to continue. Well, it outperformed, it played catch up, but I think it's going to continue to outperform gold. So that looks great. All yours, Dan.
Good morning. Hey, Greg, I didn't want to interrupt you when you were talking about the broader markets possibly pricing in the cure, no more corona problem. Steve Leeson was interviewing on CNBC, one of the Fed vice chairs, and you could just see it on Steve Leeson's face. He's like, hey, we just had this horrible ADP number. It looks like the markets are just ignoring fundamentals. And the Fed chair was just so cautious, not to pull a Greenspan, irrational, exuberant statement. He just said, I don't have anything to say. My job's to do this, and he totally ignored it. And I've been saying that for months.
But you know what? They know what they're doing. They're pumping liquidity in there, and the markets, are just saying until they tighten the spigot in some way, that money has to go somewhere. Even and look, we've seen things drops like yesterday, even though it was intraday. We've seen, like, what was it, last Thursday? There was this sell-off that was like a bear market intraday, big red bar. 2 days later, the market's ripping back to the upside. So,
Yep.
it's like there's that old saying, which I haven't heard in a while, but we used to hear it all the time. The market climbs a wall of worry. And so coronavirus, all this, I mean, I can't stand it anymore. I just have to turn off the TV every time I hear it. And I guess that's the worry. But is it really a worry? Or is it a fabricated? And we all know people got sick. I got sick. I couldn't even talk at one point. It was terrible, and I didn't confirm that's what it was. But in any case, we know a lot of people got sick. But people get sick every year. Now, whatever they did, I guess that saved from it being worse. But in any event, I don't think the rest of us are all going to die. So anyway, continue.
All right. All right. All our opens are fine. We entered a put spread on this NEM yesterday, and I also told our swing advised people that they could buy it if we got this afternoon breakout. We have a bear call spread on Facebook, and it's relative weakness. We're in trail mode. And a T-Duck is a bearish gapper here. We were trying to do a put spread yesterday, but then I canceled it. So good thing. It's having a bearish gap here. But let's continue with other gappers. Netty, $21. Gap's too big for me as a tier 1. I'm back to them. $37. I would be, are you kidding me? I would be selling in the strength pre-market. But this is very bullish consolidation right here on this day. 2 days ago would have been our entry. And in fact, in the nightly video last night, I went over like 20 stocks that are, a couple of them look like this, where it's very bullish consolidation in the top range. We'll go through them later. NOC is one of them here. We're going to do a put spread. FCN, there you go. Look, that's one of them. So over the high, that looks great. Let's keep going with gappers. NVAC, $190. Greg, do you remember the day we were going to give a 1, 2, 3 right here? And well, we posted it as an idea, but we said it's biotech, so do it on your own. Look at that. What a just beautiful setup right there. I'd be selling in the strength there myself. W Whiskey, I like this. Maybe 30-minute low as a bear call credit spread. I sent to our subscribers Libgo as a bear call credit spread as a gap and crap candidate. And look at it pre-market. It went all the way up to 165. When I fade these, I'd rather them gap up and then fail immediately. This is more of a pull into the gap. So this one's going to take a little bit more time. Hey, Mark, you're dropped in. Oh, Livgo? Livgo is tomorrow? Oh, shoot. Okay. This one, relative weakness, upside shakeout. This is not a gapper trade, but it's on my list for a short. Looks good. These are just some other miscellaneous watch ones. That's a wide range out of a base. JB Hunt. It was a buy setup. I like the little downside shakeout. So that's on the list. JB Hunt, USFD, HHC. Another one, wide range out of a base. Marble, keep an eye on it. This one's gapping down, 38.50. The gap's too big for me. HEPA looks like a Corona something or other. It's a bullish gap up. It's gapping right over this base, and it's not too big. This one's actually a watch. I'm going to put HEPA up here since you all are telling me LivGo has earnings. Jason Jazz, there's not enough volume for me to really know where it's gapping, but here, and Jazz, as I know, is also a bio, so keep that in mind. This could be a gap and crap. I personally would be selling at least half pre-markets. You know, look at it. It's $14. It's 14 is for $6 vertical above the 20. Nikola, we thought it was trying to bottom here, but earnings are now slamming it back down. We'll come back to it. NVAX, we looked at LivGo, we looked at NWS. That was a nice breakout. We'll come back to it. Tiva 12. It's in a very wide trading range. Do you remember this was the one? I think Bill Ackman got his head taken off on this. Was Tiva the one? And then he dumped it at the lows and took a huge bath on it. No. What do we got here? Possibly, you know, just a bullish retest. It's sloppy. I'm always trying to get rid of stocks here. 655 region. It's a pharmaceutical, but that could be a put spread. Todd Traub, welcome. I don't recognize your name, so welcome. 258. Yeah, that's worth watching. It's a gap breakout. Sure, it's been a strong stock. That's an ascending triangle breakout. That actually was on our list the other day, but then I stopped looking at it because of earnings. Ray Square gap is way too big for me. But I actually said 2 days ago on this breakout bar, 2 days ago, I told people that this would be the only time, at least I would be open to trading into earnings myself, is when the stock supports it. And that was a beautiful ascending triangle breakout. For me, nothing to do with it now. You know, it's extended. I'd be selling and watch on a pullback if you want it, but to me, there's nothing to do with it. V, one of you asked about. Let's see, I see nothing. It's in a big sideways range. There's no pattern. McGraw, Twilio. McGraw, can you tell me what the bullish pattern is on the daily to sell a put spread? Because remember our approach, at least